Get your savings out when you hear him shout, any bonds today? Come on and get 'em.
During economic crises, US Treasury bonds are usually financial safe havens. This time, not so much.
They were right at the heart of the sell-off.
Maybe investors don't like these tariffs and are finding ways to move into alternatives.
And that pushed up yields, or interest rates, demanded by investors to buy government debt.
Yields on 10-year US Treasuries skyrocketed 49 basis points in 1 week. That's the most in more than 2 decades.
The last time being here, in 2001, during a recession that followed the dot-com bubble. The bond market had assessed Trump's tariffs and responded with a message.
We're not sure we're safe leaving our money in the US anymore.
Now, neither trillions of dollars of lost value in equity markets nor the chorus of alarm from world leaders had changed Trump's mind, but angry bond investors...
I was watching the bond market. The bond market is very tricky. I was watching it.
That's what got him to press pause on his tariffs.
Which is very reminiscent of what happened in the early 1990s when President Clinton's advisors warned him that he has to kiss the ring of the bond vigilantes.
So who are these bond vigilantes? And why did they play such a significant role in shaping policy? Let's start with something everyone's heard of: a lettuce. In 2022, one of these became a humiliating political metaphor.
I will drive reform in my mission to get the United Kingdom working, building and growing.
Liz Truss, who had just taken over as Prime Minister, announced a budget where she made very big tax cuts that weren't funded.
The bond market completely freaked out.
They sold UK bonds massively. That in turn sent bond yields skyrocketing to multi-year highs.
Underperforming US peers by the most in years, which you're seeing here as a difference in basis points. The prospect of much higher borrowing costs hit home
and spurred the government to basically give up their plans.
The economic fallout was so dire, a column in The Economist suggested Truss's premiership had the shelf life of a lettuce. So a newspaper live-streamed one to test the theory.
I am resigning as leader of the Conservative Party.
The lettuce had won, and the bond vigilantes claimed another victory. In the hierarchy of market forces that shape political outcomes, history shows bonds at the top.
A bond is like an IOU, so you have an issuer, which might be a country or a company.
And in exchange for buying a bond, you will get interest payments all the way until the bond reaches maturity.
Maybe it'll be a 2-year bond or a 30-year bond, but the idea is that you're locking in a yield for a certain amount of time and you know what that interest rate over that time period will be.
It's why they're favoured by long-term investors, such as pension firms, and increasingly sovereign wealth funds. More on that later.
Governments use the proceeds to fund everything from hospitals to schools to bridges and infrastructure.
The bond market is kind of like the banker for a big government.
In 2024, global government debt stood at around $100 trillion. So ignoring the concerns of the metaphorical banker is unwise.
Bond investors are the ones that are owed money. Governments have to respect that. And if they fear that inflation could get out of control, they will essentially exert their influence.
People who are ultimately behaving as though they're the bankers for the governments suddenly think, I don't trust this government anymore. I don't like this, and I'm going to put up the interest rate I demand from them. And when you're talking about $2 trillion a year, the kind of money that the US has to borrow each year, that adds up very quickly.
It would impact everything from mortgages to bank profits overnight to repayments on trillions and trillions and trillions of dollars of loans.
You can think of it as a really painful meeting with your bank manager. You're overdrawn again. No more money for you.
And in essence, that's the power held by bond vigilantes.
You can use the bully pulpit in the same way that an activist investor attacking a company can use the bully pulpit to attack its stock. Basically, you sell your bonds and tell everybody why you're doing it.
So what's the backstory here?
My name is Ed Yardeni, and I coined the phrase bond vigilantes. In the early 80s, the bond investors became very, very twitchy. 3 times in the 1980s, the rebound in inflation was met by rising bond yields, which slowed nominal GDP down, which slowed inflation down. In the early 1990s, Bill Clinton was told by his advisors they had to maintain fiscal discipline because if they didn't, the bond market would upset their plans. Clinton took that to heart and maintained a relatively disciplined fiscal policy.
Then, in the 2000s, the vigilantes appeared to have taken a trip to Europe.
A reporter asked me about what was going on in Greece. I said, what do you mean? Well, I said, look, the bond yield has gone from under 10% to 40% in a very short period of time. Is it possible that the bond vigilantes basically have taken a vacation in Greece and then realized that they had a problem with that government? Now the bond vigilantes are actually more powerful than they've ever been, simply because there's a lot more debt than we've ever had.
The governments that are most vulnerable are the ones that have borrowed what the market would think is too much for the track to bear.
We now have so much debt that has been accumulated by the United States that just paying the interest on that, and we're talking about $1 trillion in interest payments.
And so investors are assessing alternative places to take their cash.
They are now nervously looking at German bunds as being safer than US debt, conceivably.
A Bund is a German bond. And look what's happened to the spread. In other words, the difference between US and German 10-year bond yields. This small-looking percentage point difference actually represents a surge in the gap between the two, as investors look to reduce their exposure to US assets.
Germany is a really good example of where bond vigilantes have less power, where it hasn't issued as much debt as places like the UK or the US, where the proportion of debt to output is over 100%. In the case of Germany, it's just over 60%.
Central banks like the US Federal Reserve also have tools that can thwart vigilantes.
So you might have heard of a concept called quantitative easing, which is when central banks step into markets and buy billions and billions worth of euros or dollars or pounds of bonds.
After the 2008 financial crisis, the Fed bought trillions of dollars of bonds, pinning yields near historic lows. This is usually a last resort.
We've recently seen the end of an experiment where the Bank of Japan tried to keep the 10-year yield on Japanese government bonds to zero. It successfully did do that, but at the cost, arguably, of distorting the Japanese economy.
Interestingly though, Japan is the biggest owner of US debt, followed by China.
One of the most important trends in the bond market in recent years has been the growth of foreign ownership, particularly China.
China owns about $700 billion of US treasuries. It's because China exports 3 times more to the US than vice versa. That means they accept a lot of US dollars. They use the money and pump it back into the treasuries markets. They're the safest assets in the world, and they also provide China with income.
China's vast holding of American debt, coupled with the frenetic advance of a bilateral trade war, led to speculation that China could, in theory, become a bond vigilante.
Will China do it? Unlikely.
If it sells a lot, it will hurt itself because it will push down the value of its own treasury bonds. More like shooting yourself in the foot as well as shooting the other guy.
So where does this leave Trump in the eyes of the bond market? Could we see an American version of the Truss lettuce?
There are a lot of similarities between the Liz Truss moment in 22 and what we've experienced with Donald Trump. In both cases, it wasn't just that they announced a policy that markets didn't like. It was that they did something that the markets truly believed to be dumb. The US these days is a far bigger more powerful, more resilient economy than the UK, you have much more room to maneuver than even the UK does.
In terms of long-term implications of what this could mean for the Trump administration, if they do not address some of the key concerns by bond investors, expect yields to spike.
The really long-term risk for Trump is that trust has already been damaged. If people no longer trust the US to be a reasonable, good faith interlocutor, it's going to be very hard to get that back.